Has the Federal Reserve lost control? You're definitely going to want to watch this one. Why are mortgage rates continuing to go up and float in that low 7 range? Has the Federal Reserve lost control? These are questions people are asking after looking at the data, seeing what they've been doing with monetary policy. And I'm going to break that down all in a second here. So if you could do me a favor, if you get some value out of this video, and only if you get some value, if you don't like it, don't do it, subscribe to the channel, give us a like on the video, it would mean the world. And if you want to schedule a call directly with me to talk about your own real estate situation, click on the link that we have in here as well. So, has the Fed lost control? Austan Goolsbee, the president of the Chicago Federal Reserve, is asking the same question himself. He came out over the weekend and said, hey, like, why are rates going up? Why are rates continuing to increase? Especially when, according to the Federal Reserve, and the real yields, what they mean are the actual rates of inflation and the rates that we see in borrowing, like mortgage rates. Many people feel they're restrictive right now. The Federal Reserve has come out and said these rates are restrictive, our policies are restrictive, yet we still see rates going up for long-term borrowing. And a lot of people are wondering, why is this happening, including the president of the Chicago Federal Reserve, and if the Fed has actually lost control. Logan Mohtashami from Housing Wire, he believes that it's really simple. The Fed needs to stop talking about raising interest rates and having a hawkish tone when they've achieved a restrictive environment. It's very interesting. Jobless claims data has improved, and a lot of people believe that until we get to about 323,000 jobless claims, we're going to see the Fed continuing to push for this restrictive policy. Right now we're at 211,000. I'm not a big believer in having high jobless claims as a precursor to whether rates should be raised or not. That's not good for the economy. This is what the Fed is saying. What we've also seen is that they continue to have a hawkish tone after every single meeting. Jerome Powell basically said, we're not going to cut rates this year. Expect another rate increase before the end of 2023 after the most recent meeting in September. So this tonality, it's almost like a scare tactic for the market that, hey, things are going to get worse or we're not there yet. That's probably one of the reasons why we've seen rates for mortgages continue to be as high as they have been for such a long period of time. They've been bouncing around in the low 7 range for a while and it hasn't really come down. And with the jobs data coming out this week, it'll be very interesting to see what that means at the next meeting coming up in the month of November. So there's a couple other data points here, and then I'll tell you what it means for people that want to buy or sell a home right now. So we've seen 17 positive and 19 negative movements in purchase application data so far this year. Purchase applications this past week are down 2%. So we've seen them go up 17 times, down 19 times so far through the calendar year, which tells me that the market is restrictive. We're not seeing it go heavy one way or the other. Now, in the most recent months and the most recent weeks, this number has gotten a lot softer. So that's another factor here as well, that we're starting to see purchase applications steadily decline, and there's more negatives than positives if you look at that week over week movement in this particular data point. The other thing to keep your eye on is inventory grew again this week nationally by just under 7,000 homes. We are seeing the most number of homes for sale in the market so far this year as of right now. And that's good news for people that want to transact because inventory's been one of those talking points. So it seems like the hawkish tone of the Fed, the constant, let's see what happens. I'm not sure if we're there yet. We're going to have to keep monitoring the situation, even though they believe they're in a restrictive environment right now, tells me I don't know, one, if they want a soft landing to the economy, and two, I don't know if we're going to get one if they keep this up. If their tonality and comments were different, then we might be in a different situation. This jobs data is going to be really important. So what does this mean for people that want to transact between now and the end of the year, or even the first and second quarter of next year? What I'm clear on is don't expect rates to go down. 7% plus may be what you need to get used to if you're thinking about buying your home. And I know this isn't what people want to hear. I get all that. Given what the Fed is saying and how the market's reacted, I don't know that you can predict anything else. We saw a lot of major companies, the Mortgage Bankers Association, Moody's, Fannie Mae, the list goes on. We know that the normal players here, they all anticipated rates coming in the low 6% range by the end of the year. I was very skeptical then. I'm even more skeptical now. And they've started to revise their projections. From now, it was like 6, now they're going to like 6.5. And obviously everyone has a different prediction. These are the numbers that are out there. So get used to 7% rates might be some of the best advice for people that want to transact. And see if it makes sense for you financially. Have a planning meeting with an agent. Sit down and see, all right, if I sell my home for this and buy a home for this, where could the numbers shake out? That's going to be the way to make an informed decision. What this also tells me is that people thinking about selling, when rates do come down, if the Fed starts to change on their policy stance here and maybe lightens up on the tone and isn't so hawkish, and rates do come down, you're going to see a major pop of inventory. So if I'm thinking about selling right now and I've got my place lined up to go, I'm getting my home on the market tomorrow. I'm moving that time frame up because there is serious demand, and we're starting to see signs of a couple of things. One, people are starting to adjust purchase prices when homes aren't selling. Two, we are seeing homes sit on the market a little longer than they had been. And three, offers are getting accepted with inspection contingencies and things that were normal pre-pandemic and then became very abnormal after the pandemic hit because of the demand and the competitive situations that we're in. There's still a lot of demand out there. There's still time to cash out high if you're a seller. I don't know how much longer that's going to last, especially if rates persist in this 7% range. So the answer here is the Fed might have lost control a little bit if they keep doing what they've been doing. Just stop talking about raising rates. It's that simple. And that would create a lot of ease in the economy, and they could maybe let things play out and see what all their policy decisions, how they're going to affect the housing market and the economy overall.